here's a special interview. He's been one of the most prominent fund managers in the world, Mark Mobius, who recently hung up his boots at Franklin Templeton after heading its Asian operations for 30 years, has now joined an Indian venture capital firm running an alternate investment fund. Neeraj Shah spoke to Mobius about his new investment mantra and how 2018 may pan out for Indian equities. Listen in.
I think the dollar will continue to look weak against many of the emerging market currencies. Of course, there's an argument to say that with rising rates in America, money will be attracted. But on the other side, investors are looking at the growing deficit in the U.S., the heavy expenditures by the Fed, and also reducing emphasis by many national investors for their foreign reserves in U.S. treasuries. And particularly the Chinese have been reducing their exposure to U.S. treasuries, so that would have an impact as well. But I would veer on the side of probably a weaker dollar going forward.
Wow. Okay, now, drilling it down to emerging markets and then to India as well and what you're doing, Dr. Mobius. Firstly, the emerging market pack. A lot of chatter in India at least, and probably in some pockets of the Asian and the emerging markets, that the micro will now start working in a big way. India has, for the better part of the last 2 years, lagged the global markets in terms of GDP growth and earnings growth. We'll probably start seeing that in India and maybe some other emerging markets too. So do you think this micro benefits or the micro working will help attract flows even if the macro were not working completely in our favor, say interest rates, say commodity prices like crude or otherwise?
Definitely. This is particularly true now with the Modi administration trying to encourage investment, not only local investment but foreign investment. There's an incredible opportunity here in India to invest in infrastructure and many other areas. And the fact that the government is now focusing on encouraging investment will have a big impact. And that goes to the micro level, individual companies, individual industries, individual opportunities.
If earnings come back and come back in a hurry, do you think there is that the principal reason why you, in your last televised interview to Bloomberg, mentioned that you believe that emerging markets as a pack and maybe India individually as well could scale newer highs in calendar year 18?
Yes, I believe that's the case, because we're seeing a lot of positive developments in these major markets like India, even China. A lot of people are concerned about debt in China and the viability of the banking system, etc. This has not turned out to be the case. And we think that the markets generally will reach new highs. By the way, Russia's now coming back and looking good. Brazil already has come back. So these big emerging markets have performed fairly well. And I think there's a good chance that we can surpass previous highs.
And for somebody who looks at all of these emerging markets, Dr. Mobius, do you think India remains a sweet spot, or is there a lot of competition from the markets that you mentioned and some others for flows to come into the countries?
There's a great opportunity for more flows to come in. As you know, there are many bureaucratic barriers for foreign money to come into India. And I believe the Modi administration is going to begin to address those barriers. And that will encourage a lot more investment. And my belief is that India will outpace China in terms of growth, which means it will be the fastest growing major market in the world. Under that kind of scenario, the interest in investing in India will grow very rapidly. And we're now to a point where the country is beginning to look like it's on the takeoff stage, where it's really getting into a sustained growth and development, which will be very good.